that have powered India's growth story. These are the companies that have formed the bedrock of our success as a nation. We begin with the State Bank of India, which actually descends from the Bank of Calcutta that was founded in 1806, making it the oldest commercial bank in the Indian subcontinent. Murli, let's begin with the oldest. What are your thoughts?
Okay, we have to, in this show, we'll be looking at many of the oldest public sector institutions. Now, SBI is the leader. It funds the entire country, so in most of the cases, if you see it, every company that we have selected directly or indirectly touches everyone's life in this country. And to begin with, SBI is very clearly the best of the lot. I'm sure we'll present more details. And SBI is a household name, but then its value was not recognized. Today, its value is recognized. I'm sure it must be roughly around 7 lakh crore or more than 7 lakh crore. It's the value of this bank.
All right, and in fact, we've got Harsh joining us right now on the broadcast to tell us more about SBI. Hi, Harsh. What are your thoughts?
Well, 200-year legacy, tough to cover in 2 minutes, but let me try and break this down a little bit more. It was constituted, of course, in the 1800s, but gave way to the Imperial Bank of India in 1920s. Thereafter, post-independence in 1955, the name of the bank was changed to State Bank of India. So it's been 69 years since they've adopted the State Bank of India name as well as the logo. And of course, it's a Fortune 500 company now. It's the largest banking and financial services company in the country by a mile. In fact, in terms of deposits as well as advances, nearly 2x that of any other competitor in the country. There you go. On 1st July, Imperial Bank of India became State Bank of India, and thereafter, it's only been an upward journey. Currently services 50 crore customers out of the 140 crore Indian population, and has 38 lakh crore worth of loans versus its nearest compete of roughly 25 lakh crore and 49 lakh crore of deposits, double of its nearest compete. 22,500 branches, that's nearly triple that of its nearest compete. So clearly in terms of reach, scale, it's got no competitor anywhere close to it. Of course, financial inclusion is at its core. It's the bank of the people. And given the number of customers that it commands, 50 crore, the reach is so wide. Nearly half of India's working population is covered by State Bank of India and has accounts or in some way transacts through the State Bank of India. Maybe a PPF account, it could be a mutual fund account, either way. It's powering the nation, bringing banking services and giving access to credit to the deepest regions of the country where it's most needed. And just with regard to the way in which it's gone about and grown in terms of its valuation, well, it was at 15 rupees a share in 1999. Today stands at 809 rupees a piece. That in itself is a 54x return outside of dividends that it would have paid during that period of time. So in itself, 1 lakh rupees would have become 54 lakh rupees had you invested, and the CAGR return on that is 17%. So not only has it aided the country in terms of banking and services, but just in terms of wealth creation. Almost 17% CAGR over the last 25 years.
All right, Harsh, thank you very much for joining us and bringing us all those details about our first nation builder. Well, next on our list is LIC, India's largest insurer and also a household name, one that inspires trust and confidence from India and from Indians across social stratas. Murli, your thoughts on this? You know, as you said about SBI, this is also a company that everybody knows about.
Yeah, I should say that LIC is older than me. It was set up sometime in 1956, but it's a nationalization of sorts, because there were a number of small insurance players. So insurance is something which you cannot leave it to players. Those days that requirement was there. Now the privatization has happened. But then, the country needed support for each of its citizens at that time, because we were just fresh from independence. The rules had to be set. It was a humongous task. So if you had to provide security and safety and insurance to the people, the one name that came to our mind is Life Insurance Corporation. So life insurance is, it just touches everybody in this country, every family in this country. So it was a compulsory kind of an insurance cover that was there. So that is a kind of touch, and today, and nobody would have thought of it being listed, and everybody could also participate in this kind of a thing.
Absolutely, and Varsha, I think, is joining us on the broadcast for more on this. Varsha, give us more about this.
Well, thanks, Nupu, for that. So yes, let's see how old this company is. Started in 1956. As Murli sir already said, it is formed via nationalization of 245 private sector insurance companies and provident funds, and introduced lots and lots of insurance products for Indian, specially tailored for Indian population. Now let's see how dominant this company is, its presence all over India. So it's spread over 2,000 branches and 8 zonal offices, and company has almost more than 13 lakhs agents operating. And if you speak about the products that they are into insurance and pension plans, then health and withdrawal plans as well. And if you speak about the offices that they cover, so offices cover almost 92% of Indian districts versus 81% of total private sector that we have. Now, this is beyond, LIC contributes beyond financial inclusion to nation building. So if you see, they offer insurance products to rural and underprivileged segments. And when it comes to social security, policies provide safety net for millions of Indian families that we have, and their policies provide for financial support, reducing vulnerability. Of course, when we talk about the human capital development for the company, they are involved in various social welfare programs that we have, and involved in education and healthcare initiatives. Now coming to the market performance since listing, how that has performed. So company was listed in 2022, and total market cap for the company is around 6 lakhs crore. Now this IPO was one of the largest IPO that we ever had, though LIC is not in Nifty 50, but its market capitalization surpassed many of the Nifty 50 companies as well. And also LIC is considered as India's most valuable PSU company, and has also reclaimed as 5th most valuable listed company.
All right, Varsha, thank you very much for those detailed insights. Well, let's shift our focus now to the PSUs that have helped defend our nation from the many security threats that we have faced since 1947, when the first war with Pakistan severely tested our newly independent country. Now, Hindustan Aeronautics Limited was established in 1940 and has since then led our aerial capabilities. Murli, your thoughts on this?
Now, this is something I'm personally, I can relate to. I lived in HAL, and they have a huge colony. Those days they used to have a huge colony, and my father was one of the early employees. He joined in the late 40s. We could hear the air raid warning every time that went off. But we had this feeling that, okay, we have Hindustan Aeronautics which is going to protect us. So my parents used to tell us that, okay, we have to switch off all the lights. It has to be completely dark. We could not even light a lamp. But then my parents would say, we were all small, I was in primary school. They would say that, no, HAL is there, they will protect you. Now that's the kind of company that it was built, and the trust and the faith that they are there to. Even today, if you go to Bangalore and you go around the Hindustan Aeronautics factory, it resonates. You get this kind of feeling. So that's a tremendous thing. But then in the course of the last 60, 70 years, its value was forgotten. Today we know how valuable this company is, how valuable it is to the company, and everyone wants to participate in this company in some way or the other.
Oh yes, absolutely. Joining us right now on this is Anushi. And Anushi, so Murli already talked about the legacy and the confidence it inspires.
As you mentioned, the legacy as HAL continues, it's on a strong path. When you think about the defense sector in general, the first name that pops out in anyone's mind is HAL, Hindustan Aeronautics, which was established in 1940. Association between Walchand, Hirachand and Mysore Kingdom is now one of the biggest defense companies in the aerospace and helicopter regions in India. Now again, the government of India took control over this company since 1942 onwards, and what was initially focused as licensing production of foreign aircrafts has now shifted to developing, manufacturing our own aircrafts and helicopters as we go forward. So again, company engaged in the manufacture of aircrafts and helicopter and now boasts a market size of about 3 lakh crore. And this 3 lakh crore figure that we are looking is it's just doubled down in this 1.5 period itself. So this is the size, this is the potential that HAL presents to its investors. Now some of the key milestones that the company has highlighted over the course of the period, which are not just, I believe, the milestones of the company itself, but even the building materials that has funded our nation's growth as well. This includes designing India's first supersonic fighter aircraft. Along with this, now it manufactures helicopter models like Cheetah and Dhruv, and they are also engaged in works of advanced aircraft like the light combat aircraft known as Tejas and light utility helicopters. But coming to how the company is going forward, if you look at the order book, that stands at about 94,000 crore. And the company expects an order book of about 1,20,000 crore as of the year end. Along with this, they are expected to materialize 47,000 crores in this 1 year time frame. So what started as licensing for foreign aircraft and then shifting focus to indigenization, production of our own, HAL has a complete transformation journey itself. The company now holds about 24,000 employees. It is responsible for that, and along with this, they are also taking part in a lot of CSR activities, which includes conversion of bio waste to compressed natural gas, holding a lot of hostels and sports stadiums and more. Coming to the stock performance of the company now, in this last 3-4 years, the stock has seen a tremendous return. But in this 1 year itself, we are looking at a 138% of a return in this 1 year, while the stock has been in pressure in this last 1 month. The trajectory of the company continues if you look at the 6 month, 1 year, and even go back and see the 5 year return. So that is HAL for you, the defense pack in general.
All right, thank you very much for that. Now, Mazagon Docks is a company that started its journeys as small dry dock and is today the center of attraction, at least on the stock markets. Murli, we were earlier talking about how big a attraction really it has become for the stock markets.
Yeah, I think our colleague Puneet will be giving details. I was just wondering, every time, again, it touches everybody, at least people who live in Mumbai, so there is this station, people who travel by local trains would know how important this place is. They will all pass by. But the importance and significance of this is something that it is, once again, in the last 3 years is what it has come to light, and everybody in the country, every investor today wants to own a piece of Mazagon Dock. I mean, people who did not, I think the issue must have come some 2.5 years back. People who could not get in there are now rushing. Everybody wants to own a piece, whether it's an FII, mutual fund, individual investor, which is why the stock is where it is.
Right. So from nostalgia to where it is today, let's go across to Puneet. He has more on this. Hi, Puneet. Your thoughts?
Well, thanks for that. So, it is definitely, a legacy company started back in 1774 and was finally, acquired by the government of India in 1960. Now, before we get to why is it such an attraction now by the investors, if you look at, over its history, the company has, delivered roughly around 800 odd vessels, and it currently builds warships as well as submarines as well. Now, these are two key segments for the country in general to protect itself, and currently it has delivered around 28 odd warships and 7 submarines. Why this number of 7 submarines is important? Because it's 50% of the current capacity of 14 submarines that we have as a country as a whole, and 7 have been built by Mazagon Docks. Now, if you look at the kind of it posts that it has delivered 5 submarines in just the last 5 years, of roughly around 2017 to 2022. And if you look at building another 4 stealth fighter frigates or warships warships over this particular period of time. When you look at, the localization effort of the company, it has been, successfully Indianizing equipment such as batteries for the submarines as well, and it has, manufacturing corvettes as well. Now, if you look at, its particular journey to the Navratna status, now it got the Mini Ratna status in 2006. Post that, it has been steadily bringing up its business as well as its acumen, and has finally become a Navratna company, which is the highest status given by the government. If you look at, just to get some picture of where the company stands as a whole, currently government sold about 84% stake in the company, so could see some offers going forward as well, but its financials roughly around 9,500 odd crores, strong EBITDA margins of 26%, so that's what's also attracted the investors. Its CSR activities is also one of the key things to look out for, roughly around 20 crores in the last year, but it listed back in 2020, and this is the most interesting part. Over the last 3.5 years, it was subscribed roughly 157 times in its IPO, which it had at roughly 180 rupees at that time. So if you definitely did not invest at that time, it was a clear miss, because the stock has run up 27 times or 2700% post that. So definitely 1 lakh rupee invested in the stock is 27 lakh now. Definitely very highly valued company right now. Its order book is roughly 4 times its revenue, and that's what's getting the street positive about Mazagon Dock going forward as well. Back to you.
All right, thank you very much for those details. Well, who can now forget ONGC, the company that leads a foray in the oil and natural gas sector. It's also a major contributor to the government's revenue. Murli, ONGC, of course, I also have a personal story. I lived in Assam for several years, and who can forget the huge campuses there?
Big boy
yes,
refinery.
big boy.
And here Bombay High, I suppose. No, so again this was set up with the aim of providing some degree of self-reliance that you need for energy, because if you don't have oil, your country cannot do anything. People cannot move, whether it's by buses or cars. Those days cars were not very important. So again, it was a very well thought strategy to set up, and there are a number of smaller refiners who would have been brought exploration. Then I think the entire subject became a nationalized subject where you cannot just go and explore. So it came under Geological Survey of India, and then Assam, I think Assam was a separate company for that matter. So the details of the growth and the story, I think we will leave it to Mihika to give us.
Oh yes, absolutely, and Mihika is with us for that. So Mihika, we were talking about the legacy of the company, but tell us more in terms of how it's doing today.
Yes, I guess you could say it is actually ONGC's birthday today. The company was established as Oil and Natural Gas Commission on August 14th, 1956, which is 68 years ago. It was set up under the visionary of leadership of Pandit Jawaharlal Nehru, and the company was initially a subsidiary of one of India's biggest refiners, which is Indian Oil Corporation, and then it became Oil and Natural Gas Commission became Oil and Gas National Corporation in 1994, and it was recognized as one of the Navratnas of Government of India in 1997 and conferred as a Maharatna status in 2010. When we talk about ONGC, it is one of the major pillars or backbones of India's energy sector. It is the largest oil and gas corporation in terms of exploration and production for India. It produces 70% of India's domestic oil needs and around 84% of India's natural gas needs, and it's also discovered 8 out of the 9 producing oil and gas basins in India, and cumulative over the years, according to the company, they have produced 1,042 million metric tons of crude and 715 billion cubic meters of gas, and they possess about 15% of India's total Indian refinery company. When you talk about how the company has funded growth, well, they are a major contributor to the government's revenue, and regular dividend payments by the company also helps the government, as the government is one of the major stakeholders. In terms of regional development as well, the company often operates in remote and underdeveloped regions, and thereby their presence in these regions brings up investments in infra and employment opportunities, and the company has over 25,000 employees currently. It also aims to produce more oil and gas for India, and India is one of the largest top 5 oil consumers. That's why higher production by the company will reduce our import dependency. And in terms of wealth creation for what it's done for investors, but the company listed on NSE and BSE back on 19 July of 1999, and currently the total market capitalization of the company stands at 4.22 lakh crores. The stock is up 64% in this year itself and 163% in the last 5 years.
All right, Mihika, do stay with us. In fact, now our national builders list would be incomplete without Coal India, a sector that gained momentum right after India's independence. Interestingly, it began commercial mining in 1774. So, Mihika, tell us more.
Yes. So coal sector mainly gained momentum post-independence. It was actually recognized as a very important need for the country in the first 5-year plan, and the government nationalized the coal sector in 1970, and Coal India was thereby formed in 1975 as a holding company for all the coal subsidiaries out there. It is also one of the backbones of India energy sector. It's the world's largest coal mining company by volumes, and it's spread across 8 different states in India. It produces around 83% of India's overall coal production and meets around 40% of India's commercial requirement. When you talk about funding growth, the company has 2.31 lakh employees, and it's a major contributor to the government as well in terms of taxation. And when you talk about lastly the wealth creation that Coal India has done for investors, well, it listed on NSE and BSE back in 2010. It has a total market cap of 3.1 lakh crores. The stock is up 31% in this year itself and 149% in the last 5 years.
All right, thank you very much for that, Mihika. Now, the hub of the IT sector, Bangalore, is where Bharat Electronics Limited was formed. It began as a company that manufactured some comms equipments, but today it makes state-of-the-art electronic systems for the Army, the Navy, and the Air Force. Mahima is with us on this. Mahima, just look at where this company has moved and how much more it's doing now.
Absolutely. So the company, it's been 70 years since the company has existed now, and the company is also has the privilege of having the Navratna status as well. Now, just a brief about the company. It manufactures electronic products and systems for Army, Navy, and Air Force, as you rightly mentioned, and it's also diversified into various products like home security solutions, smart cities, energy storage products, cyber security, and a lot more. And also they are an expert in the electronic voting machine manufacturing as well. Now, how old is the company? As I rightly mentioned, it was established in 1954, so 70 years old. It has a total market cap of 2.14 lakh crores, and just to quote how the company is, working well for the company, well, it's safeguarding the company overall and develops technology to safeguard India. Key milestones, well, a couple of weapons and overall radars that they made in terms of Akash air defense weapon, coastal surveillance system, 3D tactical control radar, and also of course the electronic voting machines. Lastly, in terms of quick facts, their order book as of April stands at around 76,000 crores, and it's expecting more 50,000 in the next 2 years, and it's exploring new opportunities in terms of exports as well, and joining hands with L&T, Airbus, Thales Reliance Defense System as well. In terms of CSR also, the stock has done very well. They're building sewage systems, they're building hospitals, and also providing free medical equipments to a lot of hospitals in the rural areas. And lastly, well, the stock has been up around 124% just in 1 year itself.
All right, thank you very much for that, Mahima. That was very insightful. Now, SAIL India is the company that truly embodies independent India's growth story. It's a company that has literally built India as far as visible infrastructure is concerned. And Mahima is back with us on that one as well.
Right. So, Nupur, SAIL India was known as Hindustan Steel when it started its journey, and its first plant was established in Rourkela, and overall preliminary work was started by Iron and Steel Ministry. Now, in terms of company, well, 65% of the company is owned by the government. However, the interesting fact here is that they are being given the status of Maharatna. The difference between Maharatna and Navratna is that in the Maharatna company, 15% of the total net worth, they can make investment decisions on their own without any government intervention. Whereas for Navratna, the cap is up to 1,000 crores. In terms of products, well, they produce TMT steel bars, wire rods, plates, railway products, and a lot more than that. And in terms of plants, they have 5 integrated steel plants and 3 special alloy plants. In terms of how old the company, well, SAIL has a similar journey as BEL. It's 70 years old. It was also established in 1954, and at present its market cap is roughly 52.4 thousand crores. Now, in terms of one line to describe how the company is, inching towards nation building. Well, it's strengthening the nation through its steel production. And overall, their crude steel production stands at 19.2 million tons, and their saleable steel production stands at around 18.4 million tons. In terms of outlook, they are targeting 20 million tons in FY25 itself, and they're targeting sales of 90 million tons in FY25, and planning a capex also of roughly 6,300 crores. In terms of manpower, well, at present they're employing more than 55,000 people overall in their organization. So this is the overall view of SAIL as well.
All right, thank you very much for that. Let's now move on to a company that the Indian government approved the first in 1976. The NTPC project began in 1976. It was a power generation plant at Singrauli in Uttar Pradesh. Now, in the year 1997, the status Navratna firm was actually conferred. It's now foraying into green energy, so leading us in new technologies as well. Joining us right now is Rucha. Rucha, thoughts on this?
Thanks, Nupur. So as you rightly mentioned, NTPC is National Thermal Power Corporation. Now, if we talk about the thermal power industry, NTPC is a pioneer. With a legacy of 49 years, the company now has a market cap of more than 3.5 lakh crore. So the company was established back in 1975 and got listed in November 2004. It is India's largest energy conglomerate and became a Maharatna in May 2010. It eventually initially was established to accelerate power development in India, and it started with fossil fuels. However, it then forayed into hydro, nuclear and renewable energy as well. It also diversified into consultancy, power trading, electrification and coal mining as well, and helped in the development of India. Now, not only operations, it is people's favorite place to work as well, as it was recognized as the top 50 best companies to work for in India for a consistent period of 11 years, and it was recognized as such in the Great Place to Work and the Economic Times survey. Lastly, talking about the stock performance, the stock is up 87% in last 1 year.
All right. In fact, let's also now move on to another company that has made it to our list. That is the National Hydroelectric Power Corporation. It's also one that has now forayed into solar, geothermal and wind energy. It began in 1975, I think. So, Rucha, tell us more, please.
You're right, Nupur. So the company was established in the year 1975, and I'm talking about National Hydroelectric Power Corporation. It got listed, however, in September 2009. Again, with a legacy of 49 years, the company has a market cap of around 96,000 crore rupees. So initially, it was incorporated to promote hydroelectric power. However, is now foraying its hands into solar and wind energy development as well. It is recognized as the largest hydropower development organization in India and has activities from conceptualization to commissioning of hydro projects, and again is contributing to the development of the nation. It has also constructed 15 projects till now, aggregating to a total installed capacity of around 10,000 megawatts, actually more than 10,000 megawatts. Lastly, talking about the stock performance, NHPC has given a return of 86% over the last year. But one thing I want to note is that the shareholding pattern, the government of India now owns around 67% of stake in the company, while the foreign institutions own 9% and domestic institutional investors own around 10% of the equity in the company. Back to you.
All right, Rucha. So thank you very much for joining us. And I'd also like to thank Murli at this point for joining us on this very special broadcast. Well, that's all we have time for on this special show. But we'd like to wish all our viewers a very happy Independence Day. And do stay tuned to NDTV Profit through the day for more. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. Profit 360, we cut through the clutter. The Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Let me start by wishing all of you in advance a very, very happy Independence Day, where we've got special programming through the day for you on NDTV Profit, and hopefully you will enjoy it. My guest today on the show is Rushabh Desai, the founder of Rupee with Rushabh Investment. Thank you so much for taking the time, Rushabh. Always a pleasure speaking with you, and thanks so much for coming by to the studio.
Thank you so much.
I do want to talk to you about investments into the broader markets, and a lot of people, and this continues to be the case. I saw the data for the month of July as well, and there's a reasonable amount of money. Most money, of course, has gone into sectoral and thematic funds, but about 3,000 crore rupees or thereabouts has once again gone into mid-cap and small-cap funds. Why do you think that is?
See, it's all thanks to past returns, Alex. See, over the past 3 years and 5 years, the returns have been phenomenal. Like mid caps and small caps have delivered more than 30% CAGR returns. Now, when we go to our clients and when we say that long term, keep your expectations moderate, the new expectation is around 20 to 25%, 30% CAGR
for the corpus.
For the corpus, right? I mean, they expect now that kind of return. So this is the money what you see what has come in. It's all thanks to the past returns what we saw, the mid and small caps, which have rallied substantially, Alex.
Okay, but then you've done a study, and I found it quite interesting. The underlying, ultimately the markets follow earnings, right, or expectation of earnings, and the reality is that while the larger companies have delivered according to expectations, the broader markets have disappointed to a large extent. What can you tell us about what you found?
Alex, that's a very great question. See, if you see the large cap segment, over 19 months, from Jan 2023 to July 2024, 19 months, large caps have delivered around 42% returns in absolute terms. Now, if you see the earnings, underlying earnings, the earnings have been around 33.5%.
Right.
So we can fairly say large caps are reasonably priced, and the price growth has been in line with the earnings growth. Now, coming to mid and small caps, Alex, from the same period, 19 months, Jan 2023 to July 2024, over 19 months, mid and small caps have delivered between 80 to 90% absolute returns. Okay.
Right.
Now, if you see the underlying earnings growth, Alex, the earning growth has been anywhere between 6% to 13.5%. So now this price growth, what you see in the mid and small cap, this is purely liquidity push.
Okay. When you say liquidity push, what do you mean?
See, liquidity push means like investors are pumping in money. See, today the SIP, monthly SIP size is 23,000 crores.
Net is about half of that.
Net is half of that, that's fine. But if you see the DIIs, FIIs and the retail segment, it is more than 20,000 crores, Alex, which is coming in the Indian equity markets. Now, when so much of money gets pumped in, automatically there is going to be a huge demand, right? And the prices are going to go up because fund managers will want to buy. See, fund managers today are not sitting, there are very few fund managers which are sitting on decent amount of cash, right? Usually most of the funds are like, invested 100% or close to 100% in that sense. Of course, they do have 5-10% cash, that's very separate. But when there is so much of inflows and the fund managers need to buy it, so they, even at a premium, they have no choice but to buy it at a premium. So what I mean liquidity is that so much of money is coming in, and because of the money coming in, fund managers are forced to buy at a premium price today.
Okay, and that is the case in the broader markets. Obviously, the point that you're trying to make, and you made already on the earnings front, is that valuations, particularly in the broader markets, are stretched. They're not keeping pace, or rather earnings are not keeping pace with valuations. So a couple of aspects to unpack here. What are fund managers themselves doing in the portfolios that you have studied? Are you seeing examples where there is rotation taking place?
So I studied 3 categories, Alex. One is value contra, one is focused, and one is flexi cap. So all 3 are very flexible in nature. See, I'm not factoring the multi cap, because in multi cap, you are 50% has to be allocated in mid and small cap, 25% in mid caps and 25% in small caps. Now, the average large cap exposure in these 3 categories is around 58-59%, okay, which clearly indicates that the fund managers are tilting towards large caps. Of course, there are exceptions where there are other funds where there have been heavy on mid and small caps, but there are good funds, say for example like Parag Flexi Cap Fund and other prominent like HDFC. For example, Quant has been very active. Their portfolio churn ratio is actually 400%, right?
And they've moved towards large cap?
They've moved towards a large cap. They are flexi cap fund, they are focus fund, and they are value fund. They initially, when I studied the portfolio, say 19 months back, they were heavy on mid and small caps. Now today they are heavy on large cap. This clearly indicates that today fund managers are more comfortable towards large caps rather than mid and small cap.
I was actually, and my team here has pulled up some data points, and I will share that with you. In the mid cap and the small cap categories, so I look at mid cap first, where there hasn't been a very substantial tilt towards large cap. In fact, in July of 2023, for mid caps as a whole and all mid cap mutual fund schemes, it stood at about 15% for large caps. That has actually fallen and come to about 12.2%. This is based on ASMF data. Mid-cap allocation has gone from 65.9% to 67%, and small cap has gone from 14.7% to 17.1%. In the small cap category, you have an increase broadly in the large cap, but not to a very large extent. It was 5.3% a year ago. In July, at the end of July this year, it stood at 7%. That's an increase of about 1.73 percentage points. Mid-cap is reduced from 15% to 12.8%, and small cap has actually gone up from 72.6% to 76.1%. But this is as a category as a whole. What does that tell you?
See, when you venture into pure small cap and mid caps, right, you have to take it like, say, the fund manager is going to invest like 100% in pure mid, because that's a mandate.
True to label.
this true to label, and it has to be true to label, Alex, right? See, that's the reason why you have different categories, so that you can mitigate your risk in a better way. See, if you, when we tell our clients and when we construct our clients' portfolio, we always tell our clients that, you know, have some exposure in mid cap, small cap. I'm saying pure because, see, multi-cap, it's a little rigid in nature. But when you have a combination of flexi cap funds, mid cap funds and small cap funds, you have the liberty. See, when the valuations get expensive, then I can take more exposure and I can invest more in the flexi cap focus or value segment, right? I can't do that in a multi-cap fund because the multi-cap goes in all you know, large, mid and small cap. Right?
But I was only asking from the perspective, and this is a thought that I had, which is why I asked my colleague to pull up the data, which is that you have 65% that has to be allocated in both small cap and mid cap to small cap and mid cap respectively. The rest of the 35% can be allocated as per requirements, and one would assume that if fund managers themselves feel that there is a lot of froth, that valuations are stretched in the broader markets, they would shift out and protect the gains that they have made by deploying in large caps. That doesn't seem to have been the case. However, there are a few exceptions, and we've also pulled up individual scheme names where there has been a substantial shift. Let's try and pull that up as we speak about it. And in fact, in the mid-cap category, the schemes that have had a dramatic shift between November and March, November of 2023 and March of 2024, you have Mahindra Manulife, which has moved from 7.8% to 20.2% in large cap. And you have a substantial shift also in the, or rather that's the most substantial shift. The others are not as much. HSBC mid-cap as well as Baroda PNB Paribas has also seen an increase. In the small cap category, you have ICICI Pru that has gone up quite substantially from 1.6% to 9.1%, which is quite a dramatic shift. Mahindra Manulife once again has nearly doubled its holding of large cap. Kotak has also done an increase, and Axis has done an increase, but not to that extent. So there are a few fund managers that are reducing seemingly the amount of risk by shifting towards large cap.
See, Alex, value strategy funds will always be valuation conscious. Okay, so for example, like ICICI is more of a valuation focused kind of a fund. It's not growth oriented. Growth oriented will be always aggressive, Alex. So which is like Axis, Kotak, these are all growth oriented products. Okay, so you also have to understand what is the strategy of that particular mutual fund. See, just because you are seeing a shift within the pure mid and small cap category, that's no one clear indication, because every fund will follow a different strategy, right? So it's, I would actually rather bet on a product which is true to its label. You know, see, if I'm investing in mid and small caps, I want my money to go purely in mid and small caps. I don't want the fund manager to take, you know, large cap exposure.
Fair point. A couple of quick questions to complete this conversation, and then we'll move to queries after a very quick break. But if you have made substantial gains in small and mid cap, you know, investments that you're making, it is likely that your portfolio has gotten skewed as well, right?
Yes.
Because of the outsized gains. Is this the time that you rebalance, and what do you do with incremental monies that you are investing? You have SIPs running. Should you tweak that at all, or is it okay?
Alex, this is a great time to rebalance. See, if my original allocation to mid and small caps was say 50%, okay, and if the 50%